The Santa Claus rally may be, but as you can see, it hasn't been a dramatically vibrant, just kind of a slow, steady uptrend. On Friday, after the Dow gapped up and traded lower, that would have been an indication there might be some profit taking. But the candlestick investor could interpret very quickly that when they opened positive today and started trading positive, that was just kind of a profit-taking day in an uptrend, making the uptrend analysis that much more secure based upon no confirmed sell signals, and they were still trading above the T-line. The NASDAQ also has been moving up steadily, not only staying above the T-line, but also staying above the 3T line. When it stays above the 3T line, that's just exhibiting more evidence that the bullish sentiment is not backing off at all. So right now, the simple analysis is that you stay along as long as the markets stay above the T-line, and very short-term prospects are that the uptrend is still in a good uptrending move because the T-line or the 3T line hasn't even been breached. Knowing that there isn't any bearish sentiment in the markets right now, charts like this on Twitter make it very high probability trade setups, especially when we know a fry pan bottom has very strong results, and we know where the ultimate breakout level is, where the pattern starts, and right here at the 50-day moving average. Most people are going to be watching to see what happens at the 50-day moving average. The candlestick investor has the advantage of seeing this pattern build up. So even though the stochastics are showing that the price might be in an overbought condition, that can be disregarded by the fact that it is in a pattern and we have broken out. The probabilities make it very simple. There should be a very strong price move. This simple analysis allows for putting on trades, like our recommendation on CRESY, was a high probability trade coming off a little kind of a cradle pattern, fry pan bottom supporting at the 50. Where's the next likely target? Probably up here at the 200-day moving average. Now, will it get there? We don't know, but the probabilities are that that's what everybody else is watching. And we can see very clearly what's happening on the way up. We know where the sell signals are, and if there's no sell signals, that still becomes a viable target. Tesla had the same analysis. Note right here at the breakout level, we did a doji sandwich breakout. How long do you hold on to Tesla? Note that Tesla hasn't even come back down through the 3T line, let alone the T line. You continue to hold until you see a sell signal. Because the patterns reoccur time after time, we can see exactly when to get into high profit trades, such as Mesa Airlines, MESA, doing a fry pan bottom J-hook pattern right smack dab off the T-line. If you didn't buy today, you can buy on positive trading tomorrow if they're breaking out through this level, telling us we're now in a wave 3. Why is that so predictable? Because this pattern, a J-hook pattern, is what occurs time after time in human nature. And here's a very simple pattern to identify with candlestick analysis. This is what we call the T-line crunch. Notice how they couldn't back off through the T-line as it pushed its way right up through the 50-day moving average. Where do you think everybody and their brother is watching to see what happens at this level? Right here at the 50-day moving average. This allows for buying right at the appropriate time, knowing exactly what should happen coming out of a T-line crunch, breaking up through a resistance level. Candlestick analysis makes analyzing price moves very simple, knowing what the reoccurring human nature reaction will be time after time. there should be a lot more in this upside or uptrending market. So stay long and enjoy the holidays. That'll be it. We'll see you in the chat rooms.